Hello, good morning. This is ES Futures Trading. This is your host Victor. Welcome to another stream. This is going to be really short. What I am doing here, I am doing my homework. I didn't have a chance to do my homework last night. And I'm doing it right now. I start with the resume. What happened yesterday has a lot to do to what happened the previous day. Notice yesterday, the previous day, where all the selling was coming from. Very mechanical selling here. And we have no excess on the upper side to begin with, right? And then we have 1, 2, 3, 4 around this area. This high. Not, I don't call this hardback. Maybe this is an area that had high activity before. Notice where it has stopped to the next day. Also overnight was sold from that, so it was a multiple reference up here. But it was this day or yesterday was particularly special because end of the month. It was end of the month, right? I try to stay away from these days because this is very confusing sometimes, and it's hard to trade. That was the case yesterday, but there was something very clear. This market was getting short. Notice, now you had, if you would, but the thing is, you have to be present in the market. Every single rally the market was sold. Every single rally was sold. The market came down here, rally, come back. Right? Come down here, rally, come back. That rally, come back. Rally, come back. Rally, come back. Rally. Market was getting shorter and shorter and shorter and shorter. Hard to trade. Okay. Then, this we have these highs 1, 2, 3, 4, 5 highs. And now this rotation here. From the opening, what we had from the opening here, we have single prints down. Okay, that's one thing. Also, we have a spike to the upside in the overnight. The day previous, we have a spike to the downside. So there were multiple signs here pointing in every direction, right? The latest spike from the previous day was pointing to the downside, but opening above the spike invalidates this. Now the next thing, the market opens inside previous day range, which advertised chop and rotation, but single print is way out of the range. Notice in the first period, in the first period, which is a sign of a weak market. But notice what value is, right? In hindsight, it's easy to understand. The thing is, let's go and understand this while it's in progress. And this takes time. Being present, being in front of the screen for hours, right? Period after period, watching this market develop, knowing, as soon as the market has three wide, it's very hard that this market is going to have, maybe the odds are low, the market is going to have downside extension or upside continuation. This spike pointing to the downside. Overnight spike pointing to the upside. Getting out of the range pointing to the downside. Value area. This proved to be, this piece of information was the most relevant yesterday because value area was higher and the lack of excess up here. Okay. Now, yesterday, we have something different. Okay. This day is over. What remains is the lack of excess here, and the 40, which is very close to the 4,600. Now, value value is lower relative to the previous day. Value is lower relative to the previous day. Got to be honest here, I was waiting a rally here to sell. You know, the market was, but market didn't give me any rally until here. Something happened here. But you got to understand also, you know, when you got this kind of selling coming from this level here, very close to, you know, now we have 1, 2, 3. I didn't know this was going to happen. Okay. But if I am if I am a seller here, why I'm selling? Because value is lower, So my trade sell to the downside here. I understand what's happening in the overall market, right? Understand? Have you seen the weekly, daily, and monthly time frames? Right? But when the market has or leaves these highs behind some potential for, you know, notice also where this high is. Exactly the overnight high bar. Very mechanical high here. You know, just it was and most of all end of the month. So if I'm going to have any kind of profits here, any kind of profits, I'm not going to expect something big here. And in hindsight, I can say, oh, this is huge, right? Well, go ahead and trade that. Nobody knows this kind of things are going to happen. Now, coming into the session, right? Price, okay? And this is because most traders just follow or blindly follow price here. All right, market is going lower, let's sell. Market going higher, let's keep selling. I see value here lower from yesterday. That's one thing. This short inventory has been rebalanced here with this, you know, there's a short squeeze. Today is a new month, so there's no pressure here now from this kind of activity from end of the month. Okay, there's no pressure here, none at all of that. But traders, the last thing they saw was price going higher. Okay, we're going to take 4,600, but this market is, you know, this is short covering here. This is classic short covering here. You know, this shorts were squeezed here yesterday. Now the market, I am still using this range here, this breakout each time. You know, yesterday another sign to the downside was the market was bought from this high here, from this particular high. Right, this one, no, my bad, this one, okay, 1, 2, 3 times. The more the level is, you know, and especially, and look at this, right? This lack of excess here, this low, exactly from POC, right? All of this buying that is in the market is, to me, from my point of view, this is, from my way of trading, this is very, very, very questionable here. Very questionable. There's a trade here in progress that is targeting this side here. All the weak shorts have been removed, you know, have been flushed out with this squeeze here. Now, notice where this high is now. It has been made. We don't have excess here, 4,600. And again, look at this. Just look how many times market was bought from this level. Here. You can have a short here. Anywhere here you got a short aiming to take this one. And as soon as I woke up here, as soon as I came to the trading desk, I took a short here. Just aiming to take this multiple. Can you imagine how many times this market has been bought from this level? But the inventory is still super low, right? Let's see how But where Cedar is? Cedar seems to be a little bit higher. Okay, third Cedar is 45, 76, 75. 45, 45, 76, 70. Oh my God, look at this. Again, around this level here. All these shorts here remain. 75, 76, 75. 76, 75. That's it. Last a little bit lower, 47, 45, 71. A little bit lower, 71, 75. That's the last, right there. That's a new last. Cedar is higher. We said that we have an upside day yesterday. We said it higher. Okay? Notice where this high is. 70 around, yeah. So this inventory here, actually, I was wrong. It is not long. This inventory is short. Almost 100% short. Notice here how all this inventory is short. So what is the contraction to all short inventory? It's a rally, right? It's a rally. Everybody's expecting a break here. And at the end, what we have here, I'm going to remove this one and this one as well, and this one too. Oh, come on. Okay. And take a new screenshot. What do we have here is balance. So we have 1, 2, 3, 4, 5, 6 day balance here. And we have a range here with excess, without excess in the upper side. 6 days, because you can even make 7 days here of balance. Okay, we have a range here and another range up there. I'm going to take another screenshot here. Oops. Because I didn't do my homework last night. I'm doing it now. Okay. What's happening in the other markets? It's not that relevant now. You know, there's no pressure from the bond market. Okay. Don't have pressure in the bond market. This is my notice what's happening. This is going to be really quick. Actually, I have to leave now. Monthly, we're starting a new month today. It's very likely, the odds are high, that this market is going to have upside continuation. What worries me is the weekly charts. Now just take a look where all this buying is coming here. You know, this is no good. This is becoming riskier and riskier and riskier here. You know, but everything is fine. End of the year. Yesterday also, we were talking about how the market was being bought from these levels. Just check it out. It didn't buy from the breakout. It sold from the breakout. Man, this is just crazy here. You know, did you see that? We were talking about this yesterday. And I'm going to say I knew what's going to happen, But those are the scenarios that we have to have in mind. You know, the more neutral we are, it doesn't matter how far the market has rallied, how big the break is, the more neutral, not the better we are going to be, the better our odds are. This crude oil or gold, this is good, this is good, this also is not bad. You see? This is dollar, bonds, and gold. Now the intraday today, I'm just checking this. This is what I do. That's in range, is going to open in range. This also the bonds are also going to open in range. Okay. What I will do today, the market is going to open inside previous day range. Overnight inventory is short. There is some rebalancing going on right now. No. Market inventory is getting shorter. Okay. Price is just an advertising mechanism. Watch out. Okay. Watch out for price. The market from yesterday is extremely long here, and this long here, what happened here, is short covering, which actually weakens the market. So be very careful here. There could be some volatility today, especially having consideration this inside day. If this inside day is taken, notice how every day that goes by, the market keeps going lower and lower towards this low here. Okay, there's no excess in the upper side here. This could be the market that has got just too long here. Opening inside previous day range is an advertisement for chop and rotation. All right, I have to leave. I wish you guys, unless you have any questions, I wish you excellent trading day. Stay safe. See you next week. Bye bye.